Hi everybody, let me just get my headphones ready. Okay, let's get going. Let me just set this to record. Okay, so let's just go through where we are. I just want to start off by talking about what we're actually seeing in these markets and what we're experiencing. As we know only too well, this is the third most volatile market ever. And we are just not going to experience anything else like this in our lifetime. This is a one-off event for our lifetime. So the question is, first of all, what's holding this market up? Because we had 20 million, I think it's 20 million jobless on Friday, and yet this market still closed higher. So we'll talk about why I think this market is going higher, and then what we can do to trade it at this particular point. And then we'll talk about other opportunities in potentially Forex, commodities, and then a few stocks. What I don't want to do is we could talk for 2-3 hours easily. There's so much to go through. So I'm going to try and be very short and precise and just look at the real key situations in this at the moment. And I think what's propping this up at the moment is, well, 3 trillion support from the government, from the US state, has gone a long way into propping this up, but primarily it's techs and healthcare. We've got a two-speed economy here at the moment. While everybody is in, or most people are still in lockdown. Lockdown is being lifted in certain places, but it's the techs that are doing a lot of this heavy lifting. And if you look at all the main FANGs, Facebook, Apple, Netflix, even organizations like Tesla and so on, they are doing a huge amount of lifting in this market, while there are other factors that could creep in to support this market. One of them is Boeing. Boeing are talking about going back in production for their 737. And there's other aspects, but healthcare and techs have primarily really propped this market up. Now, I think it's a question, there's also a question of how much confidence can you have in this market? I think a lot of people out there believe that this job situation is temporary. So they believe that all those people that are, well, in the UK, furloughed, or in the US, sidelined or even just laid off. I think a lot of people believe that this is short term. I believe that we are heading for, there's quite some major issues here, but in the short to medium term, there is no reason to sell the market in the meantime. I think you can see this chart pattern here I've got in the Dow. At the moment, we look as if we are potentially heading for 25.6. We'll look at some smaller time frames as well. But just how do you manage a market that's this volatile? I think one of the things that I'm certainly finding myself doing, is I'm looking at the bigger time frames much more often than I've ever done in the past. And I think the bigger the time frame, the more you can get an insight into where these markets are potentially going to next. One of the things, few things you've got to be careful about, particularly as day traders, and that is over trading. If you're not seeing a setup, it doesn't matter whether you're an investor or a day trader, if you're not seeing a setup, then you really need to back off and be patient, because anybody who wants to trade in this market, let alone a normal market, needs spades worth of patience. And if you haven't got spades worth of patience, that could really damage your account. And of course, the bigger the time frame you look at, the bigger the stop, and potentially the lower position you need to take. If you've still got this, huge volatile element to this market. And at one stage, all the brokers were pumping up their margins because the volatility was so great. They're backing off that at the moment. I believe in the futures market, the margins have still been increased. I don't think they've reduced them on the futures market, but certainly these retail brokers have backed off and are not insisting on the huge margins that they have been doing in recent times. So then, if you look at the also, I think there are some interesting things coming through in this market. I believe that we are going to see some of these commodities really sort of start to motor. I think we are going to see potentially a big dose of inflation and increased volatility in the currency markets, and we'll come on to that in the meantime. So I'm looking increasingly at what these techs are doing if I am wanting to buy this market, and also looking at much further down the line, for if and when this market does crack for another leg down, where is that going to occur, and how can we work that out?
Can I just ask why you've drawn the fibs where you have on that daily Dow chart?
Because this is a daily chart, and I traditionally, like on my daily indices, I really like to watch how the market is performing compared to the previous 12 month, the calendar year. So this is fibbed to the 2019 calendar year, not to the previous high and low. If I then move this to my weekly chart, I then got this on the bigger range.
Got it.
So it's just I do that because if I see a fibs that I know helps me keep in line with what's going on, then I've used the fibs on the previous calendar year for a good few years now, and I just find it can be quite miraculous how it picks off the levels.
Can I just ask, fibs, do you match those to the business cycle with the expectation of so many fibs within a certain business cycle? Is that the way you think about these things, or is it not as total as that?
Well, in terms of the way I plan my tradings, my trades, if I particularly on the side of stocks, I think in terms of a typical annual stock cycle. If you go on to something called, let me just grab this website. Here it is. No, it's not. There's one called equityclock.co.uk. I've momentarily lost it.
Equity what, sorry?
Equity Clock.
Okay.
.com, equity clock. Let me just, I've got it now. Right, here it is. So what Equity Clock is suggesting is that, I'll just get my pen. I've not got drawing tools on here. What's going on? Okay, for some reason I can't find my drawing tools. That's really odd. What have we got here? Yeah, so you can see on the from left to right, you get normally weakness in January. It follows the US tax cycle. IR35 accounts have to be taken into account where the profit and loss account levels are at the end of the calendar year. So you tend to find markets sell the very end of the year, mid-December onwards, drift into January, February, pick up as we get into the report season into April, May, sell in May and go away, so drifting over the summer, and then start to pick up and potentially break up as you get into towards the autumn, pull some profit taking on some highs in early autumn, and then you start to wind up towards Thanksgiving, and normally between Thanksgiving and mid-December you get a last leg of the market up. Of course, this year has been, this is a one-off. So we've seen this dramatic sell in February, but we've come down to key levels. So once you get some sell signals like that, particularly, let's go back to the daily. This is where the fibs on the previous calendar year really kick in for me, because if you find yourself coming back into the previous calendar year range, which you did on the 21st of February, then all these other levels here, the 50%, the previous year's low, and then these extension levels kick in. And if I just throw that back, it's an interesting point. So I think it's worth just spending a few minutes on how you could have played that on previous years. If you look at, I haven't done this in a while, so I've forgotten how it played on previous years. Let's do it anyway. Oops. So let's put fibs on 2018 and look at the reaction into 2019. Yeah, so this was 2019 was a fairly traditional year, dipping in the back end of quite a severe drop in December, but we picked up early part of January, dipped into March, sell in May and go away, three-way uptick in early to late August, and then we reached out to plus 127 extensions. So if you were trading in 2019, that level up there, once you get buy signals here, you've got buy signal there, 3rd of June. That took us up into 2018 highs. Then we get the usual summer drift. We get a breakout pattern here, back end of August. That takes us back into 18 highs. Pull back in October, which matches the typical cycle, right to the fib line, and then we eventually go to the 127 and some. So I think if you get used to using fibs in that way, I personally find that a lot easier than throwing fibs on the latest range, because you don't know where the latest range is. But if you want to try and predict the latest range using the weekly, that's much easier if you just pull back on the latest big range on a weekly. But I'm always looking for the relationship between the current period and the last period. So I'm just trying to put this back to 2019. I'll put it back on 2019 later on. But yeah, if you're looking for much bigger, you want to step back and look at the much bigger picture, then drag your fibs right back to a decent range. And it's all about where the fibs fits, because if you put the fibs on that 2018 December low, and that does help you. I mean, it picks off that 127 extension and picks off this reversal bar here on the 23rd of March. But if you do, given that it was such a big jolt and such a huge demand shock, I felt it was warranted going back much further to that 16 lows, because I like the way it nestled into this. We all know that, or we should know that if you're looking at fibs and wanting to really exploit fibs in a chart, then look for these zones. As the outer zone was hit on the week beginning the 16th of March, and then we push right back in the 50% of that range on that rebound. So what we're doing at the moment is we're just closed outside of or above this inner range at the moment, but it's a pretty pathetic 3 weeks. We are just treading water at the moment. We have, however, closed above this weekly bar here. So in weekly terms, we should be short-term looking to buy and potentially coming up to 26.3. I think we could. There's not a lot of data coming out this week. You've got UK GDP and what else have we got? Let me just remind myself. German GDP and yeah, US retail sales on Friday. So at the moment, I think overall that this market is it's over optimistic, but what I'm looking for is just to sell much higher up the scale. So all the time this market is picking up, I'm happy to look for buying opportunities and then wait to see if we can get a sell signal at a much higher level.
So you think it's still going to fall further? It's still too high?
I think at the moment, I think this market is unrealistic. I think, like I said earlier, the people who have been laid off or who have been sort of sidelined in their job, furlonged, I think at the moment there's a thinking out there, and this is what the market is showing. I'm trying to work it.
Like I don't think it's sorry to interrupt, Mike. I don't think it's the thinking. There's 80% of them have said that they're only temporarily laid off.
Yeah.
The States. So I think that's been taken into account.
So you're right. So the market is pricing in this sort of short-termism and expecting a return to some sort of normality. But it's all about it's all about the new normal, isn't it? And so what I'm looking for is further moves to the upside, and then when we start to see the wider impact of what's happened in this demand shock, i.e. the change in the relationship of the dollar, the further impact, the ripple effect. I'm just gathering my thoughts here. The ripple effect of what we're going to see further down the line in the next earnings season, and so I'm seeing some upside into the next earnings season, and then a big dose of reality as to where I think the next leg is going to happen. I mean, ordinarily markets, if the markets are going to bottom, they generally don't just drop like a stone and push right up. They normally have at least further downside until until the effects of this and the ripples of this have fed through the system and have come out the other side. So, for example, I think a realistic pattern for this would be at least a push down to 20,000 once more, at least 20,000, and then we will then have to hold 20,000 to have any hopes of getting any sort of, or closing this gap that's up here at 29,000. So in technical terms at the moment, I'm just looking for a push around about this level here. If you look at the 4-hour chart, I've isolated this 25,150 or 25,200, as the next leg down.
Mike, can I also say as well, though, that the Dow is, I think the Dow is quite misleading at the moment. I know you always say the Dow is the one that leads the market and where the Dow.
I was in the Nasdaq actually. Sorry, Cameron.
Oh, the Nasdaq. Okay, sorry, but I think if you look at the behaviour of something like the FTSE, it's very different story, isn't it? And if you look at the, you know, what's happening in the UK, it's a very different story. And I think the thing is, if you actually took, is the larger Dow a different story as well? I mean, aren't we really looking at a story of Amazon and Apple and large techs and large pharmaceuticals here, and not looking at the wider world that is actually where the market is actually showing that there's some, you know, some terrible news out there?
I think that's absolutely right. I think these.
This is where the index isn't, you know, the index is taking into account all of these superstar companies, particularly the Dow 30, where you know, if you look at, I mean, if you look at what's happening to a lot of our large PLCs in the UK, like Barclays, you know, all the ones that we keep looking at every week, Shell. Somebody said to me, never sell Shell. You know, that's evidently that they used to say back in the day, that Shell is the most safe share that you can possibly buy. So you just buy it and hang on to it forever. And, you know, it's like you've now got the Amazons and the Apples have become the new Shells because they've come through this crisis. But I think there are other indices that are showing a much, much different story. So it may be that the Dow holds up, but other indices are showing the horror story that other companies are going through.
Yeah.
Is that a fair?
No, I'm totally with you. I started off by saying that I think it's the techs that have done all the heavy lifting. And you can see that throughout. If we compare techs with some traditional stocks, let's look at the techs first. This is Facebook sitting close to. I mean, Facebook's almost worked its way back to, well, the 2020 highs is 225, and we're just 212 now. So we're all, you know, we're just a smidgen off of 2020 highs.
But again, the fundamental story backs that up, because everyone's been at home. The one thing people are doing while they're at home is playing with Facebook. It's the one way to communicate your message, isn't it? You know, so you'd expect.
But what about the people that are paying for the advertising though? If they're not making money, I mean, I was looking at Disney over the weekend, and they're burning through $1 billion a month.
Yeah, that's the whole story with TV though, Wade, it's different. It's a different story, isn't it? Because they're all just fighting for, they're spending squillions on content to try and get market dominance in that market. You know, you've got Apple, Disney, Netflix.
Are you thinking of Disney in terms of a content provider? Because that's like 5% of its company. Most of it is hotels, cruises.
Oh, is it? Oh, okay.
Yeah, Disney are relatively new to the Netflix model, aren't they?
Yeah, but but that's evidently where they see their future, because they've pulled all of their content from other channels, haven't they, to start Disney Plus? So that's
but that was in the plan long before this, though. I mean, Netflix was one of the reasons Netflix borrowed even more money last year was because Disney was pulling out to set up its new channel, isn't it?
Yes, that's right. But I think that I think then why is it? So Disney is burning through a lot of cash, but basically its price is still going up.
Well, I mean, that's a good question. That's a really good question, because that happened with Tesla, didn't it? Why did Tesla go up after Elon Musk said it was overpriced?
It went down. No, it did go down. It tanked. It went down 20%.
It's gone back up, isn't it? I mean, it just doesn't make any sense.
I think we all know what if anybody who follows Tesla knows what Elon's like.
Yes.
I think I'll tell you what, there are so many people who follow that stock. It's got such a big. They are happy for him. Unlike Gerald Ratner, they were more than happy for Elon to drag that price down, because of the way that the sales are going in China.
I mean, if you look at what happened with Apple, where you've got your buy signal there, that's when Apple said they don't know what. Is that when? No, it was the second. It was the next one along, wasn't it? That they said they don't know what their future is.
Yeah.
But Well, I think
I mean, at the moment,
so,
what,
but they've got
all Apple's done is backfilled so
they-
far.
but they've got so much cash in the bank, haven't they?
They've got $250 billion of cash, haven't they? I mean, that's
Yeah, I mean they'll get through this. They'll survive through this. And how much has Disney got? I mean, they must have plenty, haven't they?
No, I don't think so. I'm not sure actually. I
Okay.
don't think it's anywhere near Apple's.
Let's have a quick look at Disney's stock anyway.
Yeah,
Um,
but that's what I'm reading this story as being. I mean, there's plenty of other indices that are not showing what the Dow is showing. So.
yeah, I think.
Having said that, I was looking at the DAX at the weekend, and Germany, the German unemployment figures were evidently awful, and the DAX went up again. So it probably is the same story.
I think also, I mean, the flip side of this is, forget my bearish tone at the moment. The flip side of this is that if you look at the statistics of major market drops, I can't remember the statistic, but the probability of the Dow being higher 12 months later is something like 85–90%.
Probably.
So the most, I think, the sort of educated guess as to the Dow is that most people believe we're going to see a horrible run into the summer and potentially into the autumn, but by the end of the calendar year, the Dow will have turned it around, and the earnings will have come out the other side of it, and potentially looking for, people looking for a fairly bright 2020. And you've got to bear in mind that every time a lot of people who are buying a lot of institutions that are buying these stocks are buying these stocks for what they believe to be something they can hold on for 1, 2, 3 years. So you got different aspects of it, but I think I'm always obviously thinking in terms of weeks and months, not months and years. So I'm looking for a short-term continuation of this bounce to the upside before reality hits and the earnings season starts to show the true ripple effect. Because what is going to be the ripple effect? I think we're going to see greater volatility in the dollar, and one of the things that really dragged this market down in February, March was actually the dollar, because it was quite different from the 07, 08 drop, because we saw, let me just find the dollar index, just coming up now. You can see this huge monumental run up from early March into this March 22nd, March 23rd in the dollar. So I think one of the biggest indicators to me is going to be what happens with this dollar. If we see a further pickup through this barrier here, let me update this. If we see a further pickup in the dollar coming through here, that really screws the US up, because of the way in which they're pumping so many trillions into the market. If their dollar gets stronger and there's a rush to the dollar, that really messes up liquidity right across the board on a corporate level and a sovereign level. So that's why I think it's quite crucial that the dollar stays low down here. And this is probably one of the best indicators of what we might see in the coming weeks. So that's why I've got this one lined up and keeping a close check on that one. In fact, I'm going to alarm this, because if we start to get back, even start to push higher in the early part of the week, that could be an indication as to what to expect. So, but I think a few things aside of this, one of the things that has become a problem for a lot of people is they're particularly less experienced in trading. They're overwhelmed with this mix of information. We hear stories of Amazon and Apple and Facebook charging up, and yet we see other stocks and other sectors really having a rough time. Some of them picking up, some of them still dropping. So there's this. If you want to, what I suggest you don't try and do is just try and rationalize this. I think it's important just to let the market set up. Yeah, I'll just go over that in a minute. I'll go back over that in a minute. But I think you've got to let the market come to you and turn off the news. Don't listen to this expert or that expert. I think we just got to trade what we've got in this market, and if there are buying opportunities, then I will buy just as the next trader will, and I'll sell as soon as I get those sell signals. So it's about trading what you see, not trading what we've got coming through the media and even the data. I mean, look at the data we had on Friday. We had 20 million US unemployed, and the Dow closes up. So the time in which it's relevant to try and rationalize this and try and make sense of it is not now, because this is the third most volatile market ever, and extraordinary times. There's weird things going on in this market. So the people who are trading the charts and not trading the news are the people who are winning right now, people who are making money in this market. So I'm not going to sit here and say I'm not doing anything, I'm just waiting to sell. Well, that's not the case. I will buy where there are opportunities and where there are sectors that are performing well and indices that are moving up, I will buy. And correspondingly, I will look to short to sell this market when the best opportunity comes, and that opportunity has not arrived yet. Just for those of you who just joined us and those who just want clarification on this dollar, traditionally the US dollar is a safe haven anyway, because of the way vast amounts of the global commodities are traded in the dollar. It's historic because of a lot of currencies were pinned to gold for in the early part of the 20th century. As currencies started to unhook from the gold, I can't remember, I've just forgotten the term, from the gold measure, as they were inclined, they moved towards the US dollar simply because it was the biggest economy in the globe. And so if you've got, and so many foreign powers are holding dollars. China is the biggest country outside the US who are holding dollars. It's in their interest to, or for outsiders to see a strong dollar, but it has a massive impact on an economy like the US, which does still steer the Western world. So if you've got a volatile extreme move in the dollar, that has a massive impact on the US economy, which can have which has a ripple effect on the globe. So that's why also, I mean, just on a practical front, so many ETFs and like I said, commodities are tuned into the dollar. If you get a shock surprise rise in the dollar, then it just has a massive impact on general liquidity across a huge number of markets. So it's all about liquidity. So I mean, just coming back, let's look at some other sectors that are not doing so well. Even if you look at, let's look at oil. Let's look at oil stocks as well. Look at some of let's look at the big ones. And you can see Conoco have actually had quite a nice move up here. They've more than doubled since the lows in March 18. And if you look at Chevron, so all these guys are pushing up. I think the concern with oil is as we get towards some sort of normality in travel and some sort of normality in daily life, and Americans start jumping in their cars again and doing more miles than they have been doing, start transporting their children around more and so on, then I think we'll see reduction in some of those oil reserves, and we'll see further upside in the oil. However, as we know, the new normal is going to be something quite different. I think the new normal is going to be potentially more people working from home, less business travel. Short term, people are going to be, I think consumers are going to be very much more cautious and not saving up for those fantastic dream of a holiday that they've done in the past and so on. So that has a huge impact for what can happen for oil in the longer term. And once we've backfilled some of these levels, we could see, particularly if the dollar starts to get a shock push up, we'll see some further drops longer term in oil prices. Now that could turn on its head if inflation really kicks off, and with fiat currency like the dollar, that could have a huge impact on that as well. Let's start looking at some opportunities. I was going to just quickly zip through a few currency opportunities I was seeing, because I'm looking at something like, I think gold has got a lot more upside, because in all of this freakishness and this weird market we got at the moment, I think gold has potentially got a lot further to go. I'm still waiting for pullbacks in gold to try and get more exposure to it.
That's not the chart you've got up is GBP.
Yeah, I was looking at this because I'm just going to have a quick look across the. I'm looking at Aussie dollar in terms of as a gold trade. One option is a gold trade.
Well, those fibs are from last year, Mark, is that right?
Say it again.
Those fibs are framing last year's highs and lows.
Let me turn my volume up because I still can't hear it. Well, say that again.
Those fib boundaries are last year's highs and lows.
This is just the last May on this particular daily pound Aussie dollar. It's just major. There's no fibs on there. It's just major support resistance.
Oh, yeah. Okay, sorry.
I've just picked up some lows off of 18, and this major sort of 195 or £2 to the Aussie dollar up there. So I'm looking at any highs on this one. I think ultimately this pound Aussie could come back down to 170. So any currency traders out there, look for any highs in this pound Aussie dollar, because I think that will drop further. So if we, in terms of chart patterns, any push into this 195 and £2 to the Aussie, I think that could see that start to work its way down towards that one. The other one I was thinking of is let's have a look at EuroCAD. I think that's just coming to support, but that short term, that push further down is over. Of course, the other one that tends to follow the US indices, if we're going to see the US indices holding up, then US dollar yen has got to hold up. Any run to the yen is going to see the what do you call it? Carry trade. It's going to see the carry trade drop. When the carry trade, the US having practically zero interest rates, that doesn't impact anymore. Anyway, generally, as a rule of thumb, if the US dollar yen holds up, then the US indices hold up. So that's still having a rough time. So if this falls over, that's could could be an indication the US markets are not going to hold up. Ken, yeah, I think the pound has obviously got a long way to go because of the Brexit negotiations. Yeah, you're quite right. So let's carry on the oil theme with pound CAD. Yeah, so the pound is looking increasingly weak against that pound CAD. So short to medium term, there could be some further downside in that one. We have a chart pattern that is, so we're seeing lower lows and lower highs. So in 3rd of May we saw a lower high than the 15th of April. So any uptick here into the 175 level could see that pound start to drop a lot further. Notice that when we had the major indices crush, that one dropped. So selling highs into this one, particularly if the indices get weak, that's potentially a good trade. Just look at a couple others before moving over. Let's have an update on where the euro versus the US dollar is, because the pound US dollar is interesting as well. So you've got this sort of channel going on here in the euro US dollar. Normally a weak euro US is good for the DAX. So the DAX has benefited from this one falling over. If this does pick up, that could knock the DAX down, because obviously the DAX, a lot of DAX components, component companies are trading in dollars. So any rise in this one could knock the DAX off its feet. Further drops in this one could support, at least hold the DAX up further. Pound US, I was studying this quite a lot last week for different reasons. I hold a lot of dollars anyway, and my home currency is obviously sterling. So I have a vested interest in this one dropping. So we just rejected the 50% on this. I think there's a lovely chart pattern here at the highs. This is an 89-day average. So as far as I'm concerned, any market that sits under the 89-day average is a market that is liable to drop further, because that story will change if we can close above 125, 126. If we get another test of that, of the underside of that, and fail, that is potentially really bad news for. Normally, I tell you what, any breach of that and then subsequent drop underneath there would be a great short signal for me. So again, may see some short-term push to the upside, but if we get back underneath that 125, 126, watch out, because that would signify that this bearish continuation is complete. So they would have potentially topped out, taken out, run some stops. If they subsequently drag that down underneath there, then I expect to see lower levels here. Otherwise, if we're going to get some short-term selling, some weaker numbers in the short term, I should say, then just watch out for a close under 122. A close under 122 should open the floodgates for that one. And ultimately, who knows, if things get really nasty, we could come and see parity. Sounds weird? Yeah. But so at the moment, this one's been difficult to trade at the moment because it's just sitting there swooning around in an increasingly narrower range. So I think we're potentially some way off a clear direction on that. But overall, I think the most likely scenario is a higher peak would see the end of this bearish continuation, and then we'll start to see some lower numbers. So that will correspond with potential further upside in the US indices before we get the next leg down. Okay, let's look at let's swing across to a few commodities, and then we'll get straight into stocks. So let's have a look at gold, because I was talking about gold in correlation to the Aussie dollar. Yeah, I'm still looking for this 1650, 1640. Again, same sort of rationale with the, if this is a bull flag, there's the mast, here's the flag pattern. So if the market doesn't want to buy these highs, but is still wanting to complete this flag pattern, then it would stand to reason that 1640, 1650 would be the place to get in. However, if we do start continue to hold here and start closing above 17, I may not get that pullback.
Do you not expect gold to rise anyway because of the 3 trillion stimulus package?
Yeah, I think basically, the dollar, the sovereign debt in the States was 17 trillion before all this kicked off anyway. So we're just adding to an incredible debt pile, and Powell has referred to this for at least the last 2 or 3 press conferences. He is saying that this has gone on, the sovereign debt mountain has gone on way too long in the US. They're living outside their means, and it must come under control. Well, obviously that's been pushed to one side because of the demand slump. But yeah, you're absolutely right. This is why gold's up here, because the dollar is a fiat currency. It's a paper currency that's having to stretch to accommodate this demand shock. So I'm sitting here thinking I may not get my 1640, 1650. The push, the upside may just continue here. So if we open and close above this 1720 area here, then we may not get a pullback. But in the meantime, actually, I'm going to put that alarm up. I've gotten the habit. I've missed a few things recently because I've had my alarm set too low. So I'm going to push that up to 1655 and see if I can get a drop into that area. But yeah, I'm bullish on the gold. It's just a question of if it's going to let us, if it's going to do a little bit of a dip before the next leg up. Otherwise, I would think 1770, 1800, 1850 is, and beyond, is likely. If we look at the monthly chart on the gold, we're not back to these highs up here, 1925. Where can I fib it? Let me fib it right back here to 09. 2260. So we can continue to make it up to 1920. I think that's feasible. I think that's perfectly feasible. So I'm going to be patient, see if I can get a pullback in that one. Let's look at silver as well, because silver's been interesting. Silver, again, it's missed. I had an alarm set for 1465. It's narrowly missed. This is one of the misses that I've had. Because we came down to 1473. I shouldn't have been buying at 1473. I've missed this. So I'm going to set my alarm higher. And I'll set it for 1510. We're coming to resistance anyway. We're under that 89-day average, which isn't good. It's an industrial metal. I'm not going to, you can see how important this area is from July last year. From July last year, we popped up from that level to 1964, 65. I'm certainly going to buy a pullback here, and then if I can get one, and then look to see if that can hold.
But why is silver so cheap?
I think primarily because it's an industrial metal.
But its average, its ratio to gold is just under 130. It normally sits around 50 to 60, doesn't it? So the price of gold being 50 times the price of silver.
Yeah. Yeah, this is the point Ken's been making as well. I think because the target can't, hang on a second. So I thought I was going to sneeze. I didn't. I think it's got a lot to do with the fact it's industrial metal and it's traded in dollars. As opposed to effectively, gold as a currency and a safe haven. So they're different issues, and I think the warped demand slump has disengaged the normal ratios that you would see in these.
Would you expect it to go back to those ratios? Is that reasonable?
I think overall, I'm going to base that decision on the dollar. It's if we see, if for some reason that they pull the plug on the dollar and the dollar doesn't hold up to these levels, then I think a lot of commodities. I'm very bullish on the commodities at the moment, because I think if that happens, then silver, like any other commodity, could potentially benefit from that and go back up to those highs. So I expect gold to lead the way as inflation fears could creep in. And if people lose faith in the dollar and don't use that as reserve currency and swing, and gold becomes much more popular than the dollar for a safe haven, then I think the collapse in the dollar could really pump gold up and take a lot of commodities with it and give us an inflation issue that we've not seen in a very long time.
Okay.
Because if you then look at, that brings me on to beans. And beans at the moment, I've been talking about beans for a while now.
Yeah, they picked up that first fib, I think.
They're not. I would expect them to be trading above this 855. Sitting neatly above it at the moment. We're still trapped in this range down here. They've certainly perked up over the last couple of days, but they're having a problem really getting a lift. And the volumes, I think the volumes are quite low. Let's have a quick look at the volume.
Because I think Brazil has sold all of its soy to China, hasn't it? And the US soy doesn't come into harvest until June, July, for sale in September, October.
Yeah, the beans used to be quite simple because Brazil didn't used to produce anywhere near the kind of volume of beans they used to produce. So when I started trading soybeans, Brazil just wasn't in the picture. They demolished so much rainforest and harvested so much acreage for beans and other grains that they've distorted the whole picture since I started trading it. But you're right. The whole China was supposed to be buying a lot of beans from the US market, but the US market, as the rainfalls and the drought level, potential drought in the grain belt, US grain belt, is quite high at the moment. So with the situation with China and the dollar and the potential drought, that could really accelerate the beans. And the one thing that accelerated it, I mentioned this before, the one thing that accelerated beans in 06 to 08 was a combination of dollar and drought. If we see, if the dollar does fall back, and drought conditions do affect yield, I think these beans could go crazy. So I'm still buying dips at the moment, but I'm not holding a double position until we at least close above this 853, because we're still under the trend line and under resistance. So I'm just playing it cool at the moment and waiting to see what the following week brings.
Okay.
If just looking across to other commodities as well before we move swiftly on to stocks, let me just get my list up. Yeah, things like sugar. Again, this is another issue I have with my alarm. I had my alarm set just underneath, and my alarm set for 3:05, and for some reason it wasn't triggered, or if it was, I didn't see it. I know I did. I had it set for 3:10, and we gapped up. So I've dropped my alarm at the moment to 3:20 on sugar to see if we can come back and hit these September 19 lows. But we had a nice little run so far, and normally in a run like this, you know, we all know markets don't go straight up. More typically with commodities normally do at least a double bottom. So that's why I'm just backing off, holding off, and see if we can get some dips in the sugar. Things like rough rice, I'll pick it holding up. Coffee has had a run. Back here in March. Coffee is in an interesting level. I would, something like coffee, I'd be interested in a pullback next week to retest that 980. I would hold that with a stop under Thursday's low to see if we can close back above at 580, 11,580. Wheat, corn and beans tend to generally follow each other. You don't normally get one busting up like mad and the other sitting back. So wheat is a cheaper option of trading a potential grain breakout, because if you trade wheat, you can do this in ETFs, you can do it in futures. I was going to say you can do it in stocks. I can't think of a stock. No, you can't do it in stocks. But so anything into 515, 516 is potential for wheat. And quick look at orange juice, and then we'll move on. So orange juice had this big breakout in the, just before the lockdown kicked in. So as the coronavirus was flaring up, so sales of this vitamin C rich liquid was firing up. That's a nice breakout pattern. This is what I'm looking at for beans. If you get an area with this huge amount of support, and we can open and close above the support, and you get a squeeze pattern like this with and normally this is not a clean squeeze pattern because this is just shaking, but a good squeeze pattern like that in a stock where you got a better build up of buying positions and better daily bars than you got down here. If you look for that same pattern in stocks, that can really be a really powerful evidence that you could be about to see a breakout. But this one doesn't do it. This one gets flaky. I'll try and find a better squeeze pattern to demonstrate that later on. Anyway, let's have a quick look at stocks. We'll go through look through a few UK ones first, then we'll switch to US. By all means, shout or punch in anything you're looking at. Let's go through the banks at the moment. So we've got UK GDP coming up this week. Surprise, surprise, we're looking for a weak number, but we know from technical trading that weak numbers do not necessarily mean weak markets. I think the key for this, stock is how we react around that 29th of April bar. If we dip back to 99 and hold and start closing above 105, I think this has got legs into 125, 130. Again,
It did just close at 105 though, didn't it?
yeah, it's closed at 105.5, but if we at any weakness into this coming week, if we ever, if we touch 99, 100 at some stage in the first half of the week, or certainly as we get towards UKG, if we get some more volatility around the UK GDP, that might be worth a shout. I mean, at the moment, that is, if you want to get in this, I think you need to start nibbling around about 102, 103 with a stop under 100, because this is yet a potential another squeeze pattern. Because if we come up to 115 and close above 115, that could then create a squeeze and a rush towards this 127, 130 gap fill. So closing into a weekend like that, a particularly long weekend.
Yeah.
But traders have bought that before a 3-day weekend, which is a sign of confidence in a stock like that. I would have thought certainly the nervous amongst us wouldn't have.
Actually, there was a big push in the last. If you look at the 5-minute chart,
Yeah.
All of that push came. It was at 103 at 2:30 in the afternoon. In fact, it could be the USO. Could it be the Americans buying it?
Could be, yeah.
It's pushed its way up to 106.08. I mean,
just as a lot of UK guys buy US stocks, so vice versa. If you're wanting to hedge your dollar account and you think Barclays is a good trade, I would imagine that you see some Americans dipping into the LSE market and using their dollars to buy some Barclays. Yeah.
Okay. So
that close last week is good, and where. I mean, strictly speaking, you only need to go 2 bars back with a stop. So 2 bars back gives you a stop just under 100. So you could go in at 103 with a stop under 100.
Do you think it's going to come down to 103 though? Because there's like an oblique resistance line that's coming in at like 104, 105, isn't it, on the 5-minute chart? Look at the one.
We've got a 4-hour chart.
Where are you calculating the gap on that, Mike? There's so many.
Yeah, I'm looking above because technically it's closed. It's already closed. It closed the gap on the 25th of March for the gap that was created on the 11th of March. I'm looking at this gap up here that is that was created on the 9th of March. So I'm looking for a push back into the Friday the 6th level.
Okay.
Which would take us into 130 plus. If you look at, let's look at the Lloyd's and Standard Chartered. Lloyd's, that's a buy signal as well. We've engulfed 2 days price on Thursday. And that has a gap at 38, 39.
Hold on, let me get this. Well,
so the pullback area on Lloyd's is, you would have thought they might want to go and see 30 again. If this gaps up, then that's a completely different story. If this gaps up, you may have to increase, and you still want to get in, you're going to have to increase your price to at least a gap fill of 31.30 on this one. So how the market's open on Sunday and subsequently LSE on Monday is going to have an impact on your entry price on this. Yeah, National Express. That's one I've forgotten to look at National Express. So thanks for reminding me. Let's just look at Standard Chartered.
Can you give us a target range for Lloyd's? Where do you think it's going to go?
Yeah, so your stop's obviously got to be under 29. Ideal entry is 30, otherwise if we gap up, you're going to have to look for 31. And then a target on Lloyd's would be a gap fill at 38.80.
Okay, thank you.
So the risk reward's, if that works out, the risk reward's great. Obviously, we've got UK GDP ahead of us, but
Lloyd's reported, didn't it, last week?
yeah.
And so it
technically that's a buy. Technically,
dragged it down, isn't it? Because it reported
yeah.
it went down from 34 down to where it is. But actually, if you look at that regression it's had, so it pushed up and then came and rejected it, didn't it, on the 20, and then it went down. So it is actually pretty much at the low of its.
So we all but saw 35 on the 30th of April.
Yeah, and it's on a resistance. I mean, it's on a resistance line right now, isn't it?
Yeah.
It's just closed. Just if you look at the trend line, it's actually just on the trend line now.
Let me put the overall fibs on this from the big drop. Yeah. So okay, that 34.80 was right on the fib level, right to the pip.
Right.
On the fib level.
So there's a logic that says it doesn't have to go down very much because to buy, I mean, yes, as you say, if you can get it at 30, if that's a bad day, but it's probably still worth buying at 31 and going up to 30.
If that dips under 29 and certainly closes under 29, then you can know you're wrong. Let's put it that way. And we all have to accept that we're not going to win every trade. So that's your risk and reward.
Okay.
Obviously be guided by the reaction at 8 o'clock tomorrow morning. If it gaps up, potentially look for a backfill. If it's static and stable, then just look for a pullback into that bar, into the 30 area. Do you take the drop into consideration? Good question. Yeah, obviously I am concerned about volume, but yeah, I mean, there are boxes it does not tick. There are boxes it ticks and boxes it does not tick. The volume, the pickup in volume was not significant, but it was good. So you got some exposure there. There is some risk there, but I would, I think it's a fair trade. As we see it right now. Let's look at standard chartered. I want to try and get through a bit more. Standard chartered is good. That's engulfed 1, 2, 3, 4. It's engulfed 4 days of trading. A weaker sterling helps this one because of its book, its trading, its business model. So if that starts to close above 420 this week, we've got a nice gap up there at 520. Obviously massive resistance of 460. Really decent volume on the 28th, 28th of April. So that's an option as well. I'm going to move off of UK stocks in a minute. Let me just.
Can you do BT, please?
Yeah, let's do BP and BT. Let's do BT first.
Bad looking at BT.
Yeah, BT. I was.
Gosh, standard chartered is good.
Yeah, look at the volume. Wow. Yeah, obviously it's gapped down. So.
Well, it had lots of bad news, didn't it? It had.
Yeah.
It had. It's got a big competitor, because the big merger that's happened to Virgin. And secondly, it's pulled its dividend for the first time in a squillion years.
Yeah. Yeah.
But it went down to 100. It went down to £1, didn't it? 101 or something.
I mean, on a pure technical, whenever you get anything that gaps down, doesn't matter what it is, whether it's a indice, a stock or whatever. If you get something that gaps down, bracket the gap because if it closes above that 109, that's a very bullish signal. If we can, at some stage in the next 1, 2, 3 days, if we close above 109, and we're only 105, we're just under 105 at the moment.
It went up to 108, didn't it? It got up to 108.
Yeah, that was a good day trade.
Yeah.
That fitted the scalp score system for a small trade, intraday trade. For those of you who are scalp score members in the room.
What do you
Yeah, but like I said, any gap, I would bracket the trade and watch to see if that can close above 109.
And where do you think it's going to go next?
I think it may spend a while down here, and yeah, like I said, if in the next 2, 3, 4 days we close above 109, then that's worth a shot. I think that's a signal that that may be overcooked. If you look at the weekly, let's have a look at the weekly chart. I've not been looking enough.
And what do you mean maybe overcooked? What it will?
I think oversold. Sorry.
So in other words, it will come back into the 150.
Yeah, I mean that is a very unhappy weekly chart.
Yeah.
So I think patience is definitely key with this, and if it means if you want to go into BT, patience is going to be the key to this.
Okay, can you have a quick look at the airlines as well, IAG?
Yeah.
I think they're about to drop like a stone, even though they've kind of dropped like a stone.
Let's have a look at
just Boeing, Jessica.
No, it's BT. It's IAG. So ICAG is the.
Okay. Quick look at BP. That was a good close on Thursday. Yeah, that engulfed. I mean, lower close and then engulfed it. It's not a. It's a good. It's certainly not a great probability trade. I mean, the risk is that closes back under 284 the next couple of days, and that's lower. But at least they went into a 3-day weekend holding that. Oh, it's a weekly, isn't it? That's feeble. That's pathetic. Interestingly enough, the volume's quite good on this, but the chart's rubbish. Any chart that's scrappy, I just really totally puts me off. At the moment that's a very scrappy chart, but certainly one to keep an eye on. I would much rather give that a couple of days and see where we are and pay a higher price than jump in and be stopped out. And that actually has a gap to fill on the downside. That will gap fill at 300, 301. There's National Express. Now this is a good. Before we go on to airlines, I want to look at National Express because I meant to look at this one ages ago. Right, where are we?
Oof.
What's the ticker for N? Can't find National Express.
It's NEX.
That's it, got it. Wow. At the moment, that definitely looks lower. It's coming down on anything that comes down on high volume. So we are very very convergent.
Well, they're not going to go higher. Talk 14-day quarantine, are they?
No, that's true. Okay, at the moment that looks. Let's fib it a second. Oops. And then I'll move on. It's coming to fib support, but wow, that's got a lot to do. At the moment, that looks as like currency 156, 157 at the moment. What's MCRI? What is that? Micro
Do you think
Focus,
it's
okay.
going to do? Do you think it will do 156 in? And what time frame are you looking at?
Okay, I'll come back to that in a second.
Okay.
I don't like this stock at all. That's a really scrappy chart. Don't know that stock.
What company is that?
Micro Focus, MCRO. Don't like it. You want to say, Jessica? You talking about? You asked me a question about National Express.
National Express. What do you? I mean, would it? I'm looking at.
I wouldn't short it because it's this 215 is a big fib number. I personally want to get short higher up on that one if I was going to short it.
Yeah, and it's got resistance underneath. So surely, but it's not. It would only go back up again if it was to go. I mean, there is an upward trend, isn't there?
I tell you, the way I would trade this, if we closed above that, if we close above 235 tomorrow, that's and engulf the last bar, then that is a potential buy signal.
Yeah.
In the meantime, that is looking lower. That's the bottom line for me.
Okay. Okay.
Right. Let's look at EasyJet. Okay.
So if this 14-day quarantine comes in, I think that the airlines are going to go down like a stone tomorrow, because they won't be able to launch any services in July, which is what they were hoping to do.
Right. So let me just recap. The 14-day quarantine, so they're saying anybody who
coming back into the UK will have to quarantine for 14 days.
Wow.
And you have to tell them at the airport where you're going to stay, and then they'll send random inspectors around to knock on your door. And if you're not there, there's a massive fine.
Wow.
So
Wow.
so it's so the thing is that IAG has said, oh, well, obviously we respect these statistics, but if this is the case, we're going to throw our toys out the pram and we're not going to fly at all, kind of thing. But I think the next stop down, I looked at the fibs for EasyJet, and the next stop down is, so I looked at the resistance level and the fibs, and the next stop down I worked out is 458.
Okay.
It was up 505, and it did drop just under the 500 mark. Well, it was touching the 500 mark on Thursday. So I think it's had a little rally back upwards, but I think it's with this, I think it's probably going to go under 500 tomorrow.
But isn't there talk that EasyJet, if the 2-week thing comes in, they're just going to go bankrupt, basically? That even with the loan, they can't see this through.
Well, no, I think EasyJet can keep going. I think they've said they can leave no planes in the sky until October, haven't they? Is that what they said? They said they're okay until later in the year, I think.
Well, I tell you what, who cares? I mean, on the technicals,
Yes.
If they close under 500 tomorrow, then we're going to see potentially 410. If they close under 410, the doors open for 135 in theory.
Yeah.
In theory, that's the technical theory. So forget news, forget theories. If that closes on.
But do you think that as the technical story is got to push this stop down tomorrow, the next stop on just basic support and resistance looks about 458? That looks like the next resistance level down. Can you just see what you think of that?
Well, on the daily fibs, this 500 is the big fire line, the big line in the sand.
Mm-hmm.
So it's a question of and if EasyJet doesn't hold up, that could be a big drag on the FTSE. Yeah.
Yeah. Okay.
In fact, let's have a quick look at the FTSE because we looked at all these indices.
No,
and
have a
not,
quick look at IAG before you do. Can you?
okay.
Do Again.
IAG. Yeah, I mean that's a horrible close. That is a horrible close. They're coming down on volume. They've closed under this 19th March low, so they've got to close back above.
But they're not. I mean, I was looking to try and find out where their next level. And you've got to go back to 2014 to find a time when they've actually been this low and lower. And I think the major resistance is coming.
Wow. I see. Yeah, I see what you're saying.
You've got to come in at about 120, 130.
Well, I got 120 down here at September 2012.
Yeah.
I've got
nothing underneath.
You got 170 at Feb 2012. 170 looks like the next stop, which is obviously not that far off from where we are now anyway.
Sorry for interrupting you, but on Friday, IAG rebound in Spanish stock. They are traded as well.
Right.
And it rebound to 225.
Oh, did it? Okay. On the on the Spanish exchange.
Yep.
Oh, right. Okay.
Wow.
So it dropped down to what, 210, 21. Well, it's a difference because it's in euros and
yeah,
of course the trade in UK is in pounds. So I was just telling because the UK market was closed, and so that's
sure. Okay. Okay. Well, you know.
But then again, if it might be worth shorting if it's gone up. It would probably. Then again, I think it will probably go down very quickly on the open tomorrow.
Obviously, we got Mr. John, our PM.
Having said that, that was a really good point though, because IAG is not just British Airways, is it? Of course, it's Iberia as well.
Yeah.
Yes. Aer Lingus as well.
Yes, of course. Yeah. But I think BA has been the big news. That's what's been pulling it down.
Yeah.
I think so. We need to have a good look at that tomorrow, but it could go down into the 130s, really, couldn't it?
Right.
That'd be its next stop. Okay.
Yeah. Just again, well, the greatest opportunity to short it was up here on the middle of April, but every time it closed higher, it immediately closed lower the next day. So the market doesn't like it. But let's see. Let's see what the London Open is. If it gaps up, of course, the gap can stock up. It can gap up and still roll over. But Monday's going to be crucial.
That would be a turn up, though, wouldn't it? If an airline that suddenly you was planning on flying 50% of its routes in July is told that it has to now, it probably can't fly any of them at all.
Yeah.
And then the share price goes up. I mean, that would be really weird, wouldn't it? That would be weird. That would be really weird.
So I'm just trying to drag the FTSE up. Hang on. So the FTSE closed okay on Thursday, ahead of the. That's Friday. Okay, IG have quoted it as open on Friday. That's obviously the cash market wasn't. This must be the futures then. There must be. Okay. Well, let's just see what London Open is. Obviously, we've got the Asian Open tonight for US indices. So I'll be taking a quick look at that and trying to gauge from that. But again, forget the news, forget the earnings even. Let's just see how tomorrow goes. Let's look at some US airlines. We've got UAL.
The US ones aren't doing so badly though, are they? Because they have they've got a big bailout package, as has Lufthansa. Yeah.
I don't know any specifics. Okay, well certainly that's a buy signal on the potential buy signal on the daily with volume. So UAL is potentially, and there are I've heard of analysts putting buy call outs on these. In theory, that's a buy at 24.50 with a stop under 22. Let's look at DAL. Delta.
So how much of the bailout did they get, Jessica?
They've had some. I think they've had some deal where it's a bit like the furlough. It's basically that they have to agree to not sack anyone until September, is it?
Right. Okay.
Something like that. And
I've
then,
not picked that story up, so I don't
I
know.
think because American Airlines shot up when that news came out. Let's see if I can find it. But the US government agrees a $25 billion bailout for airlines on the 14th of April, receiving direct aid as part of the 2.2 trillion coronavirus aid package. But I think that the bottom line is they're not allowed to make anyone redundant while they're receiving that money.
Okay.
Yeah, that was the deal. I think British Airways is about the only one who hasn't received a bailout. And they've had a massive bailout. Of course, they've had a massive bailout in Spain, didn't they? Iberia had a massive bailout.
Right.
It's just British Airways that hasn't had the bailout.
Well, this is Southwest and LEV Airlines, so it's at least got some, it's a potential recovery pattern.
There's again a buy signal there, isn't there?
Yeah. Not a huge volume, not a very decisive push up, nonetheless. They did enough to lift it anyway. Would I buy these? If I was, I would certainly only go in half size. I guess it depends on your time span, doesn't it? If you sat in that, if you were prepared to hold that stock for 6-9+ months, then yeah, that could be a good return. We've got a gap up here at 56. In theory, you could double your money, in theory. But you obviously got a measured risk. If that breaks 24 and certainly closes on 24, then are we going to see some further dips? I mean, stocks that I like the upside. There's a few things that I've got on my list, and so I'm just going to completely change subject now and just look at some. I got my eyes on Uber. I would love to see Uber dip back to at least 30. I'm certainly not going to get in at that price. But if Uber can back to 30, I would hold a stop under 26 and see if we can retrace back to 40. Other stocks I'm interested in. Peloton had a good week.
Sorry, you think Uber will not go back like it's stable stock to buy?
Well, I would certainly risk a position on Uber. I would want to see Uber come back onto that, come down into that zone, come back into that 29. It's coming up on decent volume. It's held above the 89-day average. Ticks a few boxes. Doesn't tick them all, but it ticks a few boxes. And so yeah, we've been holding the 50% since 5th of May. Okay, it's only the 8th on Friday, but it's had 3 good days. So that's my. What do you think on Uber?
Sorry, yeah. No, I just was following as well Uber, and
Okay.
I know that it has 16% of food delivery.
Right.
Of
Okay.
its business. That's why it attracted me.
Right. I think there's some potential upside in there. I'd be very, very patient for a pullback. I wouldn't engage that at that height. I'd want to see Ideally, a dip into 29 or maybe a little bit lower. Peloton, did I look at Peloton? I don't think I did I? Peloton. So it's a breakaway gap. I would I'd want to see 36. I'm not sure if we're going to see it. I certainly wouldn't buy a breakaway gap like that. But I would be interested if that dipped at least close to 36. So I can't do anything with that one at the moment. This one's got, I'm looking at the earnings tomorrow. This one, what's happened to that? I must have the wrong ticker on that. That's the wrong one. That's not the one I meant. Okay, can't remember their name. They're on. That's it. O-N-O-Triple-N. That's the one. That's the one. Well, I need to back off until this comes out with results anyway. But I will be interested in a dip back into that trend line on that one on 15. If it runs away, I'll have to reevaluate and let that be. Any stocks that you guys are interested in? This is just this is what my scans are throwing up.
I came around Pinterest. It's kind of interesting stock, and it's, I don't know, I just not particular like in American stocks. I'm more in Europe.
Right.
But like it's quite low for a tech company.
Yeah, I was looking. I've had a quick look at Twitter as well. Not quite. Let me just draw that accurately. Is it? This is the one you mean? Is it?
Yeah, that's the one.
Yeah.
Pinterest.
Yeah. I don't like. I don't like buying in front of that kind of selling. That couple of, that's a pretty decent dip there. Has it had earnings? Has it had earnings recently? Ideally, I would want to see 16. Let's have a look at Twitter, see if Twitter's any better. I think Twitter's better. No, it's not. Yeah, these are great stocks, not looking that good. Okay, so that 27.50 was a decent level. No, I'm gonna have to sit that one out for now. TikTok. Okay, that's the Chinese one, isn't it? This is a recent float, isn't it? Aren't these guys, isn't this an IPO, an upcoming IPO?
Nope, cannot tell you about TikTok much.
I think that might, I'm not even sure it's on the market yet, is it?
No,
Okay.
Nope, it's not.
I think that's an IPO. I think they're lined up to float. But anyway, yeah, I would. They're not great charts at the moment. I think there are better charts out there. So I would just sit back and let those go away. Okay, I think any stocks anybody wants me to look at, because I think I'll leave it there for now, and then I'm going to be doing a lot of scanning in the morning once London's open. and looking at a lot more techs as the Nasdaq's holding up, just seeing if there's any other, particularly looking at what's earnings. I don't think there's not a particularly busy earnings week.
Mike, can you just have a quick look at the DAX? Because
Yes, I did say I was going to look at that, didn't I?
the tech DAX are supposed to be entering into bullish territory.
Yeah.
It's
Right, it closed right on the 50%.
yeah. Well,
What are you seeing?
well, the commentary I read said the RSI is floating in bullish territory at 55.91. The MACD is showing a buy signal. Support stands at 10.711, 10.722, 10.276. And it said that the resistance level, the key resistance level, is 10.963. So it's just managed to close above the 10.963 resistance level. So that's why it's entered into this bullish territory. And they're saying that basically they think it's going to go up to 10.888.
10.888. Well, we closed above there.
It's slightly below the. Sorry. It was
11.
Yeah, that's what I'm saying. It's gone above that. So, but a move above this level confirms that the bulls are in control. Yeah.
We've got a gap.
And they're saying that the April high, as such, they will attempt to move past the April high and 100-day EMA at 11,367.
Yeah, I mean, we've got a gap up here at 11.5, give or take a few pips. So we're just under 11 now. So if we can see any weakness back into this trend line at 10.6,
it's like
10.6.
But it might be a scalper school kind of thing on the open.
I think it is, yeah. I mean, that's the thing with the Dow. If you look back at the Dow last week, we had a really good intraday sell on Wednesday. As soon as they close the market and turn it around.
Yeah.
It spent the whole of the cash, or a big chunk of the cash session selling. I said into the close, you don't short it for various reasons, but yeah, that's crazy. So at the moment, you can see how, yeah, it's a pretty feeble market, really. You could have made money. It's such a weird market. You make just as much money shorting it as you can buying it. In fact, a lot of these pushes, see that push, this big push up here on the 26th of March, that was in the European session. So they took a week to drag it back down again. And even then gapped it up in a European session, on the Asian Open, sorry. So there's just so much of this, you know, this is why these markets are frustrating at times. And this Dow is no exception. Some of the best moves are not in the cash session. And last Wednesday. So when we finished last Wednesday, we had 3 lower closes in the 4-hour chart. And then Thursday and Friday, they dragged it up. That's just how crazy this market is. So be warned. I think we just need to be very, very patient, because if we can slowly grind up to these resistance levels, into, who knows, maybe later this month or maybe into June, and then see if we can grab some decent intraday and sell signals that can give us an intra-week move. But last week was a gap down. So ordinarily with a gap down, I would then start to short into resistance, which I was doing on Tuesday and Wednesday. Profited intraday. This is where being a day trader can really Well, it really makes sense in a weird market like this, because you can catch the trend of the day and only just see it whiz up when the market's closed, or on a day when you're not trading. So let's, unless you've got anything else, there's nothing else that's screaming at me. I've just shared with you a few trades I'm looking at, but I need to do some deeper scanning now. Moderna, that was what I was looking at. Yeah, see, that's another breakaway. These guys have had a drug approved coming out the back of phase 3, I think. That's corona related. That's why they're so buoyant. But if you look at it's a mess of a chart back here, isn't it? Even as it was grinding higher, it was a mess of a chart. But it's just not a very high volume chart. But a squeeze pattern did emerge. Yeah, a really nice squeeze pattern down here. But boy, you had to be a contrarian to sit in that one. But these lower volume biotechs and farmers can be like that. Right, okay, I'll do some more thorough checking and feedback, but that's all we've got now. Enjoy the rest of your evening, and I'll see those of you in the room, trading room. I will catch up with you as the week unfolds.
Thanks, Mike.
Thanks, Mike.
Thanks, everybody.
Thank you. Bye-bye.
See you soon. Bye.
Thank you.